So as Richard mentioned, the idea behind this panel is about the how. And I think that is a really important part. We all saw the protests outside, and we've seen the concern about greenwashing. And the main question that comes out of all of that is, okay, yes, you've said you're going to do this, but how? How are you going to implement this? What does it actually mean to be a signatory to the principles for responsible banking? And we're here to answer those questions. So, Ralph, we will start with you. ING has played a leading role in developing the collective commitment on climate. It has developed a comprehensive climate strategy. Can you tell us about that strategy?
Yeah, sure. If you look at where we come from, I think for all of us, if you look at a climate strategy for a bank, basically there's two sides to it. The first one is as to what you can do with your own footprint. And the second one is about your secondary footprint. Basically the footprint that we more or less support given our asset base. Now if you look at our own kind of footprint, if you look at what we do as banks, there is a limited opportunity in order to reduce that one. But you do it nevertheless. So for us it's very clear that at least we've been carbon neutral since 2007. Nevertheless, we have pledged to reduce our footprint by 50% over the last 6 years, and coming in 2020, reduce water usage, only purchase renewable electricity from renewable sources by next year for all of our locations, which is quite a challenge, by the way, since we're in. Thank you. Because we're in odd places as well, and that's where we need to do it as well. So we're really engaged with making sure that that works as well. But that's all around what we can do as a bank ourselves with our own footprint. The real impact that we can make together is about the indirect footprint. The International Economic Agency has calculated that in order to make sure that we will make the Paris Agreement all together by 2040, so basically manage the impact to well below 2% in terms of global warming. $68 trillion is necessary to go into this. And with that, we have an immense power to influence that. First, by making sure that we do finance renewable energy, that we do finance sustainable improvements with our companies through new structures that basically give a lower interest rate to our customers if they do apply the sustainable development goals, for example, but also to really look at the reduction of your secondary footprint by looking at the different sectors that you're active in. And we've pledged as ING to reduce our indirect footprint in line with the Paris Accord on 600 billion of assets. So that's how you do it. And then you start negotiation with your customers, you start a dialogue with your customers, and to the extent you're in activities that have real alternatives, you basically stop them. So we have decided to exit coal 2 years ago already, because there is many alternatives for coal-fired power.
So with that, how do you measure it and how do you set targets from a climate perspective? When you're talking about doing your part to make the Paris Agreement goal, what sort of targets are you setting and how do you come to those?
Yeah, well, that's a very interesting one, and I think most of us have been discussing this for many years, whether here at the UN or at the World Economic Forum. And how do you actually calculate your indirect footprint? And how do you then make sure that you reduce that? At a certain moment a year ago, we just said, well, you know, this is what we apply, and this is the way we calculate it. And we developed a methodology together with the 2-degree investment initiative to measure the impact of different sectors. So basically we differentiate between a couple of sectors, and the energy sector, within that oil and gas, shipping and aviation, the cement industry, steel industry, real estate as well. So basically the energy intensive sectors. because that's where we basically will be able to make the biggest impact, right? Those are the ones that we need to address. And so with them, we found a way to calculate that impact and also the way to calculate their footprint and a way to see a trajectory towards a much lower footprint, which was developed by the International Economic Agency in terms of what these sectors can actually do themselves already to reduce their footprint with technology that's out there that basically they need to invest in, that we can actually support them to invest in. So this is not about exclusion per se, this is about inclusion, but having that discussion with your clients in these sectors to invest in a way to reduce that indirect footprint. And it's there, we measure it, we have a trajectory, and we report on it. Actually, just last week, we came out with our first annual report on what we call the Terra approach. And basically through that, you see what our commitment is in terms of reducing the indirect footprint per sector and where we really are at this moment in time.
Great, thank you so much. We will move on to the next panelist. We will go to Herbert from Access Bank. So Access Bank is a Nigerian bank. Nigeria is the leading economy on the African continent. It also has the highest population on the continent, and that is forecast to double by 2050. So what are the key challenges in your operating context that the bank has to address through its targets and through its commitment to the PRB?
Well, 200 million people is a lot of people. But with the population growth rate that we see, like you said, is going to more than double by year 2050. Now, while that is a positive thing in terms of the demographic arrangements, it can also amount to something that could be a big, big problem if issues around employment, for instance, are not resolved. So what we're doing in Access is a couple of things. First of all, we're leading the charge as far as making sure that we can provide funding to support people, to support SMEs, funding for gender balance, et cetera, because like we say in Africa, if you support a woman, you've supported a whole family, all right? So each time you support each woman to set up a business on her own, you can imagine the multiplier impact as far as employment and all of that is concerned. So those are some of the things which we're doing. I'll give you another example. If you look back 10 years ago, many institutions were not supporting SME businesses, and you had 38 million unique bank accounts. Now, that has implications as far as financial inclusion is concerned, and of course, issues around SDG as far as sustainability and all of that. Now, what we're doing in Access is providing funding, providing support, all right, to about 2 million new people every year, all right? And the whole idea is that by the time we push that digitally, working with our colleagues in the entire banking industry, we can make a big change, positive change for the Nigerian populace.
Great. One follow-up question, if I can get my notes back up. I was trying to be green and not waste paper printing it out. And so Access Bank engages with the central bank on a regular basis, at the Nigerian central bank on a regular basis. Are there opportunities to partner or collaborate with regulators, policymakers, or other stakeholders to drive substantial contributions to society and help your bank meet those targets?
If you take the reason we're here today, where you have about 130 banks sign an agreement and make a public commitment, the whole idea is that there must be strength, all right, in cooperation. And by the time we build together, perhaps we can begin to make that needle shift. Now, Access Bank has long realized that the easiest way to get this thing moving, all right, is through cooperation. And working with the central bank, for instance, in 2012, we created the equivalent of the Equator Principles in Nigeria, which is the Nigerian Sustainable Banking Principles. Through that process, we're able to get the entire industry moving in the same direction. Now, we will do the same thing with other policymakers. We will do the same thing with our comparator or co-opetition, if you like, in terms of the industry, because that is the only way we can achieve the movement we want to create with in the same type of pace that we're looking for. So there's great room for those collaborations because they are critical for us to create the change that we need to create.
Thank you. We will move now to Oleg from DNB. So DNB is Norway's largest financial services group. It is a big player in the energy sector, which I know is an issue of contention among some of the people out front today. it is also amongst the world's leading banks in the shipping industry. So with that in mind, how does DNB, and in what areas does DNB have its most significant impacts with regard to, signing up to the principles of responsible banking?
Well, first of all, it is important to say that when you're big in your sector, you do have an influence and impact, and it is important to use that in order to change. And we at DNB, we are striving to contribute to a positive development in these two sectors. But as we know, there are quite a few dilemmas and challenges in this sector. And I think that in order, overall, in order to succeed with the principle for responsible banking, we need to be open on the dilemmas. And we are. So we are open on this within the organization, outside the organization, to stakeholders, to civil society. That is important. And but obviously we have clear expectations to our customers. So let me be concrete. Couple of examples within shipping. We don't want to be responsible for beaching ships in Bangladesh. We have been heavily engaged in the responsible standard for responsible recycling of shipping. And the whole industry is now working towards getting more ship owners into these standards. And we have a clear expectation when we finance shipping that the ship owners meet these standards, and this will be in our loan sheets from next year. Another example within shipping is the Poseidon principles, which we have committed to. That then we are open on our portfolio of shipping we finance. And this is a standard, working together with other banks on this initiative, where we assess and disclose the climate alignment in our portfolio over time, i.e., we report on the emission in this shipping portfolio. And the goal is to take down the emission by 50% by 2050. But this, thank you. But this is an example of the fact that we do this, we are large in this sector, and we work with the other ship owners. The industry is important. To work with the other banks is important, and we work direct towards the customer. And then the other sector, energy. And it's important to have two thoughts in your mind at the same time. We have been and we will be in energy going forward. Energy is important to society to develop. And we have a clear goal to increase our loans in renewable and infrastructure by 25 billion within 2025. On the other side, oil and gas is important in our country. And what we see is that oil and gas will be, like it or not, it will be a big part of the energy mix going forward. But what we see is that gas is better than should replace coal. But nevertheless, we have great expectations towards our customers, and we want to work with the winners of tomorrow. And we assess all projects very carefully and only invest in the ones that are sustainable long term. But what you also see is that these companies, many of them, they have the technology, they have the competence and the resources to invest in more efficiently in other areas. Like yesterday, one of our biggest company, energy company, was here in New York, showing they're financing the new ocean wind project outside New York. So I think we have to work gradually to change here with the industry. And I have great expectation that many of these companies will come up with the solutions going forward.
That's great. You kind of preempted my follow-up question a bit on target setting. You mentioned a couple of very concrete targets you've set for the industries in which you're doing business. How did you come to those targets, and how often will you revise those going forward when you're looking at the impact the bank can have overall as a signatory to the PRB?
Well, I mean, we have great ambitions, and we have clearly defined what areas we have the greatest impact, and we have clear targets, and we will, work going forward on this, setting the targets. We have had good experience by setting targets, and what we saw from the board side was that we asked, set targets. It was really the business units that came back with very ambitious target. And we learned that today. I think why is the reason for that? One thing is that there are many opportunities in this transition. And secondly, our employees are really, engaged in this being responsible, doing responsible banking. So the employees have really set the target very, very high. So, but I would also like, if I have a chance, to say one area where we did have succeeded, where we set a target, because I think setting a target coming from within the organization is important, not set by others. We set a target many years ago with gender equality, and the goal was the target was to have 60-40, at least 40% females at management level in the bank. So it started with an internal target. Today, it's nearly 40%. And this is so important because it's fair, but it's also important to attract talent. And I'm proud to say that, in June, we appointed a new CEO, which is female, Kerstin Bråten. So I think it shows that if you work hard over years, you achieve your targets. But it's important to be quite clear how you should reach your target and follow up continually. Thank you.
Great, thank you. Moving down to Adeyemi from Keystone Bank. So Keystone Bank is another Nigerian bank. So how does Keystone intend to contribute to the sustainable development goals objectives in Nigeria?
Okay. Thank you. You will recall Demola rightly said that it's been established that Nigeria will require 83 billion annually to meet its sustainable development goals. If it's situated with the resources of the country, for instance, the 2019 budget is a mere $29 billion, which means there is a gap. And it means that government alone cannot resolve the challenges. It requires concerted effort and cooperation of the organized private sector to support government in this direction, which I think financial institutions in Nigeria should play a leading role. So as a bank, we try to integrate this into our communication and impact assessment. I think working with other banks can create a robust and integrated financing framework that will assist government to achieve its sustainable development goals. And we also, as a bank, ensure that we have an approach that promotes accessible and affordable financial services to disadvantaged groups, which either though were not served by former financial sector. Because we believe that financial inclusion is a critical instrument for Nigerian government to achieve its sustainable development objective of reducing extreme poverty, also reduce barriers to economic participation by women and disadvantaged group, as well as promote financial services, financial literacy and education to all to drive efficiency. As a credible bank, we ensure that we support in those directions and partner with like-minded institutions in the industry and beyond to support in terms of providing financial services to other underprivileged. For instance, we have partnership with National Postal Agency in Nigeria that has location in 774 in Nigeria. By so doing, we're able to access or provide financial services to adults that have been excluded from financial services. Thank you.
Yeah, thank you very much. That's very interesting. And digital financial inclusion is something I've been hearing a lot about in so many interviews I've done over recent months. And digital financial inclusion specifically, how are you using technology to help achieve those goals that you just talked about?
Okay, financial service sector in Nigeria has evolved over time, and technology has played a critical role in that evolution. And as a people, we are also evolving to an era of disruption controlled by the tech industries. And as a bank, we've adopted technology as a competitive edge as against expanding via bricks and mortar of branch network. Having that in mind, we ensure that all our processes, from internal engagement, credit review proposals, and also reporting, are automated and accessible remotely to drive efficiency. We've also introduced to the market a number of disruptive tech products. We developed a state-of-the-art mobile application that not only allow people to carry out financial transactions on the go, but also enjoy a lifestyle offering. It's the first to be zero data-enabled mobile app. You don't have to have internet connection or data for you to carry out your financial transaction, particularly in the rural area of the low-income people that don't have money to buy. I think that's helped in terms of financial inclusion. We've also developed a chat banking application layered on artificial intelligence to enable you to chat and carry out financial transactions at the same time. We've also developed a product called Rapid Account Acquisition Portal. It enables prospects, customers, by providing basic information to open accounts on the go. And we, like other institutions in the financial institution in Nigeria, develop agency banking that leverages on businesses to reach new territories, and we provide them with mobile app and point of service terminals to carry out financial transactions on behalf of customers. By that way, we think that we are empowering the disadvantaged group and also share prosperity with everyone. Thank you.
Great, thank you very much. We'll move now to Lilia from Landsbanken. And Landsbanken is the largest bank in Iceland, and it also does a lot with digital solutions for customers. In Iceland, how do you see technology, similarly to piggyback off of that last question, how do you see technology playing a role in addressing the key challenges facing Iceland?
Well, I think we've mentioned some of the social impact of technology, but I'd like to actually point out some of the challenges instead of maybe saying how we fix them, because we're a very well banked society in Iceland. And we see two challenges, or I see two challenges that we need to tackle. And One of them is social, and that's inclusion. And part of that we've tackled by making sure that the immigrant society and the sort of visually impaired are included. The second social one is loneliness and the digital impact and how informal social interaction is disappearing through the use of digital. So I quite like to use our digital banking to create a community and a sense of purpose for those that use it. So to tackle that real issue of social exclusion and loneliness. But the third one, I think, is the biggest one so far, and digitalization is an environmental issue. And I'll tell you about that because in Iceland it's a very real issue. Digital requires a lot of data. Data requires fast processing, storage, and data centers to provide that. And this is a real issue for us in Iceland, and I think we may need to make the connection. We are actually faced with the question of whether we should harness a waterfall to provide power to a data center, or whether we should keep that waterfall and provide enjoyment and entertainment for ourselves and our visitors, our tourism industry. And this is something that hasn't really been tackled, and as leaders in banking, we're all thinking about digital. It's a great way of banking. It's efficient for everyone, and our customers love it. But we need to make sure that we think about it as a production line, that data is a resource, and power is absolutely a scarce resource, and we need to make sure that we use it effectively and sensibly. We do not store data in many places, and that we think about this, and we can actually implement this with our clients as well by having the discussion.
Great. Thank you very much. A different set of challenges indeed, but no less important. So another thing that you've been doing at Landsbanken is working to close the gender pay gap. This year, the bank was recognized as providing equal pay to its employees. So what's next? That's an issue that remains a challenge for many companies, including banks, but where are you going next? What other areas has the bank identified where you can have a significant impact?
Yes, we've tackled the gender gap, like Ólöf said. We very much follow Norway in that respect. But our remaining challenges, obviously the big ones are the ones that I mentioned before. But my goal for my bank would be to make sure that that EGS factors are included or a part of our own customer credit ratings. And for that to happen, we need to have a conversation with our clients, because they want to understand why they get certain rating and why they're not getting financing. So we need to have a good conversation about credit ratings. I would like to include those factors in the long term in those ratings. However, we have the challenge of being bankers and therefore lacking trust. So what we have been doing, we've been making sure that we work really hard on our own bank, on our own operations, before we take on that challenge of having that conversation with our clients. But that's the end goal for us.
Great, thank you very much. So we will move now to Francois from Natixis. And Francois and I actually spoke earlier this week on the phone to talk about the collective commitment on climate action, of which Natixis is a signatory. And I know that Natixis is a leading financer of renewable energy, but in our discussion, we talked about kind of looking at the way the risk-weighted assets of the bank are split between green assets, neutral assets, and brown assets. I would like to know kind of what sectors or activities you intend to prioritize as you look to move more toward the green side of things as a signatory to the PRB and the collective commitment.
Yeah, actually, as you said, Billy, we are very active in, for example, in renewable energies. Last year only, we have been financing 7 gigawatts of renewable energy, and renewable energy is 70% of our assets in terms of power generation. But having worked on these principles for responsible banking for the past 18 months, we wanted to exit from just a focus on green assets. We wanted to have a comprehensive view of our portfolio because if, you know, and Simone recalled that earlier, that if humanity has set a target in terms of, with the Paris Agreement, how our portfolio is capable to align with that. And if we want to align with that, we need a comprehensive view and not only focusing on the green assets. So we have been working for the past 18 months to be able to have a comprehensive view of the impact of our portfolio on environment. We have defined a 7-scale taxonomy, and we are rating every financing in our portfolio. We have already done that for 70% of our portfolio. Today we have published what it looks like, and there's no way back now that we have given transparency on this portfolio. I think it's exactly in line with what has been said on the principle for responsible banking on transparency and accountability. And now, every loan that is being processed by our bankers is going through a questionnaire. And this questionnaire is very, very precise, depending on are we financing a railway or a building or a power plant. And by responding to this question, which is compulsory, our bankers are defining the rating, environmental rating of what they want to finance. And according to this rating, we have a bonus-malus mechanism, which means that we are analytically adding more risk-weighted assets to the brown transactions and removing some risk-weighted assets from the green transactions, which in a way means that the return on the financing that we can expect is different depending on how it has an impact on the environment. But I think that more important than this mechanism of bonus-malus, the fact that we have a full view of our portfolio and of every loan in our portfolio will allow us to set targets on where we want to be in 2 years, in 5 years, which means that we are going to manage and to monitor our portfolio, taking fully into account the environmental impact. So this is live. It has started last week, and it's already fully embedded in our systems, in our commercial decisions, and in our credit committees.
So that's very interesting. That sounds like real tangible action on what these principles are trying to achieve. So what does that mean for your customers, for your clients? So what can they, now that this has been implemented, will they lose access to capital if they're not green enough? Or what is the outcome for the customers directly?
Well, when it comes to banking, we have several businesses, asset management, insurance, payments, but our banking activities are investment banking activities, which means that our clients are large companies. And what I can testimony of is that for the past 18 months or the past year, all the CEOs of our clients that I've been meeting, and I'm meeting quite a lot of them, we have spent at least half of the meeting talking about sustainable development. And it's whatever their sector, energy, real estate, aviation, you name it, all our clients have set on top of their agenda, can we align our trajectory to what is requested? And why are they doing that? Because they fear that if they don't do so, they will have a problem to access the two resources that they need to develop their business, which are financial resources and human resources. So they need to show that they have a trajectory that is sustainable. That's why the fact that we have worked on this mechanism, and the fact that every of our bankers have been going through this taxonomy and advocating on the impact on what they are financing and having a real challenge, we are more expert and we can help better our clients to define their strategy to be able to access to the financial market. Because we are not only providing balance sheet to our clients, we are also bringing them to the capital market, and they need advisory on that, because that's the first time they will have to demonstrate sustainability in order to get the capital. So I think that things are moving exactly in line with the principles for responsible banking. Of course, we have been talking about green finance, about sustainability for a long time, but I feel that there's something moving fast at our clients, and that we are here to accompany them.
Great, thank you very much. So, last but not least, we move to Diony from SocGen. So, you are making commitments to contribute to the goal. SocGen is making commitments to contribute to the goals of the Paris Agreement. Can you explain more about what those goals are and how you're addressing the portfolio alignment challenges that help you follow a trajectory to hitting 2 or 1.5 degrees Celsius?
Yes, these are very important priorities for us, and I think it's important to highlight the way we approach it. First of all, we strongly believe in coalitions. We really believe that aligning portfolios relies also on getting common frameworks and common objectives and working together. So we were among the founding members of these principles for responsible banking. We were also one of the 4 banks signing the Katowice Agreement about portfolio alignment. Recently, we have announced this summer that we were at the initiative of the Poseidon agreements, which are about aligning on shipping and contributing to lowering the CO2 footprint of shipping industry. And of course, today on the collective commitment on climate. And we really believe that this is an essential key success factor to align portfolios. So really, first of all, working all together and contributing to building coalitions. Second is, of course, measuring our impact and working on the most carbon-intensive sectors and publishing on them. And we have published the TCFD report this year to explain how we are approaching this. And it's quite a significant work to do this type of reports. I will focus mainly on energy. As one of the world leaders of energy financing, we really feel we have a special responsibility and a particular role to play. And there it's a field where we can have an impact. And when we speak about energy financing, we are approaching it in 2 different ways. One is accelerating our disengagement from the most carbon-intensive sectors. We have announced years ago, after the Paris Agreement, that we would stop financing coal projects. And more recently, we have announced that we will have zero exposure to coal by 2030 or 2040, depending on the regions we operate in. So first of all is setting exclusions and updating our sectorial policies to make sure that progressively we transition out of the most carbon-intensive sectors. Second thing is about really contributing to the energy transition. And we have committed to finance, that was back in 2016, 100 billion and to raise 100 billion of financing for the energy transition. So we are ahead of our target. We are almost there 1 year in advance. So today we are making an announcement and taking a new commitment, which is to reinforce our engagement to 120 billion financing for the energy transition from 2019 to 2023.
Wow. So when you talk about financing the energy transition, what part of that is tied up in innovation and developing new technologies to help move away from fossil fuels? And what are you doing in that regard?
So innovation is in our DNA. And innovation, actually, we have built our strategy, and we said our profitable growth relies on two pillars. One is innovation, and the second is responsibility. And it's really the combination of innovation and responsibility which will ensure the proper transition. And, you know, the question of are we going fast enough, not fast enough, is a very important one, because you need to address the two important imperatives. One is climate change, and the second is rising inequalities. So really the combination of these two will really, in a way, dictate the pace at which the transition will be acceptable. So what role innovation plays in that? And I will take another example, moving away from energy. Taking Africa, Société Générale has Africa as one of its core growth areas. And while we launched this new strategy and incorporated our CSR strategy in our core strategy, we launched a program which is called Grow with Africa. And Grow with Africa sits on many pillars. One is financing the necessary infrastructure, waste treatment, water treatment, energy, renewables. And this requires a lot of innovation in terms of financing schemes, creating new partnerships, new ways of financing the significant needs of Africa in terms of infrastructure. And second way we are doing it is financial inclusion. And there we have used our digital banking capabilities and the online banking services we have to offer banking services to farmers and to underbanked population through our digital banking, which is called YOP, and we target to offer this solution to 1 million population medium term. So really innovation helps to drive financial capabilities and offer the proper solutions for the transitions, but also digital and innovation makes banking more accessible to people.
Great, thank you so much, and thank you to all of